Hello friends, welcome to learning sessions, and today in this video we will be covering the topic related to the rehabilitation and recovery. I hope that you must have been enjoying our videos. So if you have been watching our videos for a while, please do hit the like button, and further do subscribe the channel if you have not subscribed so far. And further, if you want to join us, you need to visit our website iibf.info, or you can basically download our Android application from the Google Play Store and enroll into the courses over there so as to start preparing. And if you want to join us on our WhatsApp group, you need to WhatsApp us writing your name, mention CAIIB along with it, and WhatsApp it to the number 83609444207. We will be adding you to the appropriate group over there. So the topic over here is related to the rehabilitation and recovery. So that is basically related to what is basically when the loan account is defaulted. It may be due to the willingness, that there is willful default by the borrower, or it may also be the reason that the customer does not want to wants to pay the amount, but unwillingly he's not able to do so. Okay, so that is basically related to the default. Can be there can be willful default, and there can be a non-willful default too. Okay, and for the default is basically related to what, when we are not able to fulfill our obligation, when the counterparty is not able to meet the commitments over there. That is basically related to what, that is related to the credit default, or we can say that the account is a stressed account, or we can simply say the account is turned out to be non-performing asset over there. So in case of the direct lending or the fund based lending, when the principal component or the interest component is not repaid, that is a default in that case. And further, in case of the non-fund based lending over there, in case of the non-fund based lending, let us take the case where a bank guarantee has been issued in favor of a person B over here. On further, person A applied for the bank guarantee, and bank basically issued the bank guarantee in the name of the person B over there. And the person A was having a commitment, so as to having an obligation, so as to pay the amount to person B over there, in which he defaulted. In that particular case, bank has to pay the amount. Because the bank has extended the guarantee to the B over there, and after that bank will be recovering the same from the person A over there. Now when the amount was to be recovered from the person A, the customer is not basically able to pay the amount willingly or non-willingly. Okay, so that is the case related to the non-fund based lending, default in non-fund based lending. Third, it is related to the in case of the treasury operations. Now what do you mean by treasury operations? Treasury operation is related to the investments purposes. When you have invested the amount, whether it is related to the foreign exchange, whether it is related to the money market instruments, when the amount has been invested over there, and further the counterparties are basically not able to pay the amounts, that is the basically case related to the default in case of treasury operations. And fourth one, it is related to in the case of the securities trading business. When you are in securities, when you are basically investing in securities, or you are selling the securities, or basically buying the securities, and further the settlement is affected. Now what do you mean by settlement? Let us take the case that you are basically you were to buy the securities, and further, when you to buy the securities, you paid the amounts as to buy the securities, but the securities were not delivered. That is the default in that particular case, in the case of the security, when you are investing in securities. Or it may be the case that you want to sell the securities, you have handed over the securities, but the payment is yet to be made, and it is not made in full, or has been made partially. That is basically default associated with the securities, that is trading business over there. And for the fifth one, it is related to the cross border exposure. It is related to what? It is related to the cross border exposure. Now, how the risk is available over there, default risk is available over there in case of the cross-border exposure. Let me just tell you that you have made a payment, that is cross-border transaction, and further there were some changes in the political or the regional laws over there in that particular country, due to which you are unable to settle the transaction. That is related to what? That is related to the default in case of the cross-border exposure. The next topic that we are going to cover, it is related to non-performing assets over there. So as per the Reserve Bank of India directives, the banks are to classify their loans as per the standard assets, or the performing assets, and the non-performing assets. So when the asset is not performing, when it is showing the signs of the irregularity over there, first of all, it turns out to be special mention account. So let me just tell you that we are having a loan account over there, and further it's working very fine. In that case, it will be a standard account. And further, when there are signs of irregularity, what do you mean by signs of irregularity? When the interest part or the principal part are not being paid, then the account shows the signs of irregularity. At that particular stage, the account is classified as the special mentioned account. Just let me write over here, that is a special mentioned account over here. And further, even after the duration when the account was basically classified as a special mention account, still the account shows the signs of the irregularity that continues, the account at particular stage will be basically turned out to be non-performing assets. Okay, so there are three categories in case of the SMA, that is SMA 0. When the irregularity is from 1 day to 30 days, it is SMA 0. And when the irregularity is from 31 days to 60 days, it is SMA 1. And further, when the irregularity is from 61 days to 90 days, it is a case of the SMA 2 over here. Okay, so these are the three categories related to the SMA. And further, after that particular date, after that particular time period, the account will be classified to be as non-performing assets. And further, there are three categories in case of the non-performing assets. One, it is a substandard account category. And the second one, it is a doubtful asset category. And third one, it is a loss asset category. So we are having three categories over here in case of the non-performing assets over there. Now, what is the main purpose of the classification by the Reserve Bank of India? Why did the Reserve Bank of India give the directions related to that the accounts are to be classified into the performing assets or the non-performing assets? The reason is quite simple, because Reserve Bank of India wants the banks so as to maintain the provisions for the same. As per the ICAAP norms, as per the Irac norms, not ICAAP, as per the Irac norms, that is the income recognition and asset classification norms. So what norms are applicable over there? Irac norms are applicable, which are basically income recognition, because how we do classify our income, that basically based upon the categorization of the loan account itself. So it is related to the income recognition and asset classification, and also we need to maintain the provisions for the same. So these are said to be Irac and provisioning norms. These are said to be the asset classification right over here. And further, these are Irac and provisioning norms. Now, what do you mean by Irac and provisioning norms? That you need to classify your assets, and further you need to maintain the provisions for the same. So let me just clear you one point, that whether the account is standard account or the non-performing assets, you are to maintain the provisions for the same. Whether the account is performing asset and non-performing asset, the provisions are to be maintained. But as we go through the different stages of the non-performing assets, the provisioning percentage do increase. Okay, so that is the scenario related to it. So we'll be looking into it, that what are the different categories over there, and for what particular time period the account remains in one category and further then transferred to the another one. Okay, so when the account is basically in order, in that case it is a standard account. And when the account is showing the signs of irregularity, the account is mentioned to be as a special mentioned account. I just told you that previously the account is standard account, then the account is showing the signs of irregularity. It is basically SMA account, but it is not basically we classify it as SMA account only, but the provisioning norms that will be applicable during this particular period, those will be as same that of the standard account the provisions were applicable. Okay, so if we say the provisions were applicable at 0.40%, in that case we'll be saying that the provision will be applicable, same provision will be applicable even though the account is SMA account. Okay, and after that, when the account is now turned out to be NPA, the account will first of all become what account? It will become the substandard account. And will remain there for the next 12 months. And after that, the account is transferred to the doubtful account. In doubtful account particularly, we are having three types: doubtful 1, doubtful 2, doubtful 3. So we will be learning through them also. Okay, and also if there is any reason that by which bank wants to continue, the loan account in their books, in that case that can be basically retained over there in the loss asset category over there. So first of all, let us have a look at the provisioning requirements for the standard assets. So if the loan account is related to the direct agriculture or SME sector, in that case, even if the account is standard asset, the provision of 0.25% of the outstanding balance is to be maintained. And for all the other loans and advances which are not specified specifically, the provision is to be maintained at 0.40%. For the commercial real estate loans, For the commercial real estate loans, provision at 1% is to be maintained. And further, if the loan is related to CRE, when the loan is related to CRE, the provision of 1% is to be maintained. But if the loan is related to CRERH, that is commercial real estate, residential housing, in that case, the provision is to be maintained at 0.75%. And in the case when the loan is related to the teaser rate housing loan. Now, what do you mean by teaser rate housing loan? That in the initial years, a lower interest rate is charged and then the higher rate of interest is charged. So in case of the teaser rate loans, a provision of 2% is to be maintained. This is the category related to the standard assets only. And after that, it is related to the substandard asset. So when the account is now turned out to be a non-performing asset and it is categorized to be substandard asset, in that case, first of all, you need to understand the concept related to the secured asset and unsecured asset in case of the substandard asset, because when we will be creating the provisions for the substandard assets, in that particular case, you just need to look into the factor whether the loan was secured loan or unsecured loan. Now, how you'll be basically finding out that the loan was secured loan or unsecured loan? So you must be looking at the factor that what value of security was available when the loan was sanctioned. That at the time of sanction, let us say the case that we are having a loan account where the loan amount was amounting rupees 10 lakh over there, and further over here, if we are having the value of the security, in case of this loan, so the value of the security at the time of the sanction will be representing it by VOS, that is value of security. If it is not greater than 10%, that is up to 10%, then the loan is said to be what? That the loan is said to be the unsecured advance. Okay. So if I just said that we are having 10 lakh of the loan amount over there, and the value of the security at the time of the sanctioning of the loan, and please do mark my word, at the time of the sanctioning of the loan, if the value of the security was up to rupees 1 lakh, that is maximum up to 10%, then the loan is said to be unsecured advance, and you'll be maintaining the provision at 25%. You'll be maintaining the provision at 25% of the outstanding dues. You'll not be basically bifurcating the amount into secured advance or the unsecured advance. We'll be just looking at the factor that what was the value of the security which was available against the loan amount, and as per that, we'll be basically identifying whether the loan account was secured loan or the unsecured loan, and further we'll be using the percentage so as to find out the provision to be maintained. Is that clear? And further, if the value of the security is above 10% of the loan amount at the time of the sanctioning of the loan, in that case, the loan is said to be secured loan and the provision is to be maintained at 15%. And if the loan is related to the infrastructure, then in case of the unsecured loan, the provision is to be maintained at 20%. In case of the infrastructure loan, and if it is unsecured advance. Okay, that is a related concept. And further, I just told you that in case of the doubtful category, we are having the further three categories, that is D1, D2 and D3. D1, D2, D3. D1 is basically doubtful 1, doubtful 2, doubtful 3. So when your account turns out to be non-performing asset, it will be there for the next 12 months under the substandard category, and after that it will be basically classified as the next higher category, that is doubtful 1 asset category. Okay, doubtful 1 asset category, and it will remain over there for the next 12 months. And after next 12 months, it will be in the doubtful 2 category for the next 24 months, and then it will be for the unlimited time period under the doubtful 3 category. And further, if there is any reason due to which it is required so as to keep the account in the accounting books of the bank itself, in that case it will be classified as a loss asset, otherwise it will be written off. Okay, so what is the tenor? So in case of the substandard asset, it will be there for the 12 months. And after that will be doubtful 1 asset for the 12 months, for the next 12 months, and doubtful 2 for the next 24 months, and under doubtful 3 thereafter. Okay, so that is the case over there. And in case of the doubtful asset, when the account is classified as the doubtful asset category, in that particular case, you must be classifying the advance as the secured part and the shortfall in security. So for what part of the loan we are having the security, and for what part we are not having security, that is shortfall in security. Is that clear? So it is somewhat different from that of the substandard asset. In case of the substandard asset, we just classified the loan as a secured or unsecured asset, looking at the factor of the value of the security which was available at the sanction of the loan. But in case of the doubtful asset, you will be looking at the security so available right now, looking at the realizable value of the security that is available right now, and based upon that we'll be basically classifying as that the loan is basically secured somewhat, and further which one is the unsecured part right now, and further we'll be basically calculating the provision for as per that. Okay, so if I say that we are having a loan amount of rupees 10 lakh, and for the value of the security which is available over there is rupees 4 lakh, value of security so available is rupees 4 lakh. So over here I can say that the secured part over here for which the security is available is amount rupees 4 lakh, and further for which there is shortfall in security, the amount is 6 lakh over there. I'm just writing U, that is unsecured, and S for secured part over here. Okay, so under the doubtful one, for the secured part the provision is to be maintained at 25%, and for the unsecured part the provision is to be maintained at 100%. That is for the part where the security is not available. Okay, so we'll be calculating the provision in that manner. In case of the doubtful asset, will be bifurcating the amount under the category secured part or for which the security is available, and shortfall in security. Is that clear? And then the account is classified as a doubtful 2. Under the doubtful 2 we are having the provision for the secured part at 40%, for the unsecured part it is 100%, and for doubtful 3, whether the part is secured or unsecured, the provision is to be maintained 100% uniformly. Okay, and further if the account is classified in the loss asset category for some reasons, in that case the provision is to be maintained at 100% of the loan, 100% of the outstanding amount. Okay, is that clear? That is related to what? That is related to classification of the loan accounts. Then it is a case related to the willful defaulters. Willful defaulters. Now what do you mean by willful default? So if you just sanctioned a loan, so you sanctioned a loan to person over here, he's having the capacity so as to repay the loan, but he's not fulfilling his obligations intentionally. So that is basically what? That is willful default. That is willful default. You have basically sanctioned a loan for the working capital purposes, but he has basically purchased a machinery out of it. That is basically related to diversion of funds or siphoning of the funds. You sanctioned a loan to the XYZ firm over there, but they just invested the amount into the capital market, or they just invested the amount into the sister concern over there. So that is also related to the willful default. You sanctioned a loan to the firm over there. You sanctioned a loan to firm over there, XYZ firm over there. They purchased the machinery and further just sold the machinery without the consent of the lender. That is also the willful default. And further, the definition was given by the SS Kohli working group. SS Kohli working group. And what are the different definitions? I just made you understand already. So if the borrower is having the obligation but is not paying it intentionally, that is basically willful default. If you have sanctioned a loan to the borrower for some specific purpose, but he has diversed the funds over there, that is also related to the, that is also related to what? That is also related to the willful default. If you have sanctioned the loan but the borrower has disposed of or removed the movable or immovable fixed assets, that is also related to the willful default case over there. Okay, then further it is related to the cutoff limits. Now what do you mean cutoff limits? For that particular limit over which the penalties will be applicable, over and above which penalties for the willful default will be applicable, and that is basically said to be 25 lakh rupees or more. So if the outstanding balance is 25 lakhs or above than that, in that case penal measures for the willful default will be applicable. And what are those penal measures? Let us have a look at it. First of all, no additional facility will be sanctioned by any of the banks or financial institution. So if the account is basically marked as the willful default by the under the Reserve Bank of India list, under the Reserve Bank of India willful defaulter list, in that case for the next 5 years, for the next 5 years, no financial institution or the bank will be sanctioning any kind of the loan for the additional facility to the borrower over there, which is listed under the RBI willful defaulter list. Okay. Further, the lending institutions shall formulate a policy with approval of their board of directors. Related to what? Related to that they can display the name of the willful defaulters in their websites, in their branch premises itself, but there must not be any discrimination among the different defaulters over there. Okay, so a policy can be maintained by consulting the board of directors. Okay, then it is related to options available to the bankers for stressed assets. So first of all, we need to understand that it's not the case that if there is credit default in the loan itself, that will basically result into the loss to the bank itself. Okay, so it's not the case. So there are different avenues which are available to the bank where the bank can go for the recovery so as to recover the loss, and further in the worst scenario also the bank can recall the loan. So timely action is basically required, and the bank must be having an appropriate strategy over there, and that also play a very crucial role so as to achieve the best recovery of any of the stressed assets over there. Okay, so the banks first of all must be formulating a strategy over there, must be keeping in mind the legal system so available, and also the social aspect prevailing in the country itself. And what are the different steps which can be taken? First of all, it is related to the bank can do exit from the account, and the second one, it is related to the, we will be actually learning about them in detail. Okay, so first of all, it is related to exit from the account. Second one, it is related to the rescheduling or restructuring. Third one, it is rehabilitation. Fourth one, it is compromise. Fifth one, legal action. And sixth one, it is related to the write off. Okay, so first it is related to the exit from the account, and that is basically possible at a very early stage. So when you are able to locate the signs related to irregularity in the account, in that case you can choose this particular option so as to exit from the account. So let us take the case that XYZ bank over here has sanctioned a loan to the person B over here, and the loan account is now showing the signs of irregularity. In that case, a takeover loan can be sanctioned by any other bank. And further, XYZ bank over here will be doing what? XYZ bank over here will be having the exit from the account itself, because the loan will be taken over by some other bank itself. And also in the case of the consortium loans, where we take the case that here we are having a corporate ABC, and different banks A, B, C, D have sanctioned the loans over here. And further, A bank basically find out that there are basically the signs related to the irregularity in the account, and the other banks may be related to that they want to take over the loan. So that's basically quite possible in the case of the consortium lending itself. Okay, so that is related to the exit from the account itself. The second one, it is related to the rescheduling and restructuring. So when the account is not related to the willful, when there is no willful default, and the default is there due to the different conditions so imposed by the society economy itself, so in that case the bank can go for the rescheduling and restructuring. But also there must be a consent between the borrower and the lender to the latest terms and conditions so available. So whatsoever the terms and conditions would be prevailing, though there must be a common consent between those two, and further the bank can go for the rescheduling and restructuring of the account over there. The third one, it is related to rehabilitation. That says sometimes the business enterprises face adverse internal or market conditions and incur losses for a longer time, resulting in default for the banking payment system. Okay, so it may be the case now that you are doing well, but there are some market conditions due to which you are not able to make the profits, and further you will not be able to pay the bank obligations. That is related to what? That is related to a scenario that actually happened over there, and that is not going to be forever. So in that particular purpose, the bank can select the option related to the rehabilitation. Technically, in the case of the manufacturing sector, the unit is said to be a sick unit. If there is erosion of the net worth, more accumulate cash losses to the extent of 50% of the net worth during the previous accounting year. So if during the previous accounting year, if you were having the net worth equal to 1 crore, and further there is erosion of 50 lakh of the net worth due to the accumulated cash losses over there, in that case the unit is said to be what? The unit is said to be the sick unit. And further the bank can go and further can do check the viability of the project, feasibility of the project itself, and definitely can go for the rehabilitation in such cases. Okay, but the bank needs to undertake the detailed viability study over there. That is a rehabilitation. And further it is related to compromise. So even if even if the bank has tried the restructuring, rescheduling, rehabilitation process, and that is not basically working, or bank basically found out that the rehabilitation will not work, that the rehabilitation, rescheduling or restructuring will not work, and in that case the bank can go for the compromise. That can be a OTS, that is one time settlement, can be there. In such cases the decisions are influenced by the availability and reliability of the security. So if you are having the adequate security available with you, why will you go for the compromise? That will not be the situation, na? So that is basically depending upon the decision. In that particular case, that depends upon the availability and reliability of the securities and enforceability of the documents. Okay, then the fifth one, it is related to the legal action. So in the cases, even if when you are not able to recover the amounts by the way of a compromise, definitely you will be looking into the legal aspects where you can initiate the recovery proceedings. So the different forums are available, like the civil courts are available, DRTs are available, government machinery are available. So whenever the loan is related to, if the finance is basically related to the government sponsored schemes, in that case there is basically particular government machinery which is available, which is basically appointed over there by the state governments, and further those can help you for the recovery. And for the second, it is related to the civil courts. Now the banks can file the suit cases, the bank can file the loan cases under the civil court over there up to the amount of rupees 20 lakh, up to the where the due amount is up to rupees 20 lakh, because above rupees 20 lakh the loan suits will be filed with the DRT, that is the debt recovery tribunal over there. Okay, but there is one issue related to the civil courts, because the proceedings in case of the civil courts are very slow. The proceedings are very slow in case of the civil courts over there. The third one, it is related to lok adalats, which are constituted under the Legal Services Authority Act 1987. There is a consent decree which is passed over there, and for the loans up to rupees 20 lakh are dealt in the lok adalats over there. And also there are lok adalats which are set up under the DRT, which can basically also handle the cases above rupees 20 lakh. Okay, so that is the case over there. And further, the fourth one, it is related to the debt recovery tribunals, that is DRT and DRATs. DRT is a debt recovery tribunal, and DRAT is debt recovery appellate tribunal. Okay, so these are constituted under the RDDB FI Act. Now what is RDDB FI Act? This is Recovery of Debt Reduced to the Banks and the Financial Institutions Act 1993. Okay, so loans accounts which are having the outstanding balance above rupees 20 lakh rupees or above, that can basically the loan the cases can be filed with the DRTs over there. Then it is a case of the SARFAESI Act, that is the Securitization and Reconstruction of the Financial Assets and Enforcement of the Security Interest Act 2002. So where the amount is above rupees 1 lakh, the outstanding amount is above rupees 1 lakh, and further the loan account is not related to the agriculture land, and further where the outstanding amount must be, let me just tell you what are the conditions. One, it is related to balances must be 1 lakh, above rupees 1 lakh, outstanding balance must be above rupees 1 lakh. And further, whatsoever the outstanding amount over is there, that must be greater than 20% of the principal plus interest amount there. Okay, so that is the condition. And the land in question must not be the agriculture land, and further related to that, the account must be classified as a non-performing asset, and it must be a secured asset. In those all the cases, SARFAESI Act can be applied, and further we can go for the enforcement of the security over there. Okay, and further, the possession of the security can be taken by serving 60 days notice to the borrower, and further the after possession the charged security can be sold after giving a notice of 30 days. Okay, so prior a notice of 60 days is to be given whensoever we are to take the possession of the security, and after we have taken the possession of the security, we further need to give a notice of 30 days so as to basically sell the securities. Okay, the next, it is related to the write off. Now what do you mean by write off? that we will not be basically, when we have basically made all the efforts related to the recovery, but still the bank is not able to recover the amounts. But still the bank is not able to recover the amounts. Now the bank was maintaining the provisioning. Now the bank was maintaining the provisioning. I just told you, in case of the substandard loans, if the loan is secured, 15% of the provision is to be maintained. Otherwise, if unsecured, 25% of the provision was to be maintained. If the loan account was doubtful one, in that case, 25% for the secured, 100% for the unsecured. Doubtful 2, then 40% for the secured, 100% for the unsecured. If doubtful 3, 100% uniformly. If loss asset, 100% uniformly. So provisions were basically were previously already created. Now those provisions can be utilized so as to write off the account, account. And further, if the provision so basically maintained is not enough, let us take the case that we were having an outstanding balance of amounting rupees 1 lakh, amounting rupees 1 lakh, and further the provision is being maintained amounting rupees 70,000. Now 70,000 provision can be basically utilized so as to basically a write off 70,000 amount from the outstanding balance, and further 30,000 balance will be debited to the profit and loss account. Is that clear? That is basically write off. But write off at any stage, it never means that the borrower's liability to the bank has ended. Okay, it is never the case that the bank, if it has a written off the loan account itself, it is not the case that the borrower and liability is ended. Okay, so that would be related to part one of this video, related to this particular video. So kindly please do rate the video out of 10. And further, if you want to join our CAIIB group, you need to WhatsApp at the number 83609 44207, and we will be adding you to the appropriate group over there. And you can enroll into the courses visiting the website, or you can download the Android application from the Google Play Store. Thank you so much, and see you again.